Hi there. In this video, we will continue our discussion about the consolidation of financial statements. I am planning to focus the whole lecture on one comprehensive exercise where we will consolidate the income statement, the retained earnings, and the balance sheet. But before we go through the example, I would like to review with you the key points in this chapter. That in the previous chapter, we say a parent company can buy 100% from a subsidiary company. And this we call it full control, where the company will get access to all the income and the dividends of the subsidiary income. And we will not have non-controlling interest. But we say in real life, the parent company might buy a percentage higher than 50%, but lower than 100%. If it falls within this range between 51 and 99, here we call it partially owned, and we see a new account comes out called non-controlling interest. The point is, with a non-controlling interest, we need to give them a portion of the net income and a portion of the dividends. And this is what we will discuss it in this exercise. So with this in mind, let us go this one. And before I continue, you will get a copy of this example on Brightspace. I will upload the same Excel file, but I will leave you to go through the video and try to answer the example by yourself. First of all, in this example, there is a company that acquired 90% of Cedra, the subsidiary company, for $279,000 cash. So in the previous video, I said the parent company can pay cash or bonds payable or preferred stock. The issue with bonds and preferred stock, the fair market value might be higher or lower than the par value. But for the cash, we have no problem. However, the purchase happened here on January 1st. And now we can see here the trial balance on December 31st. It means the time difference between the acquisition and the consolidation, 1 year. So we need to keep this in mind because this will reflect on the retained earnings statement. During the time of the acquisition, the book value of the subsidiary company was 301. What are the components of the 301,000? We can see it here. The common stock and the retained earnings of the subsidiary company, if we add them together, we get 301. So just to keep this in mind. Now, here we see all the debit accounts on the trial balance, all the credit accounts on the trial balance, along with their totals. Just remember the numbers, I highlight them here. First, we see the investment at 318,600. And now we might wonder, what is the difference between 279,900 and 318,600? This is the amount of the investment on the acquisition date on January 1st, but this is the amount of the investment on December 31st. And what happened in this year is the addition of the net income and the subtraction of the dividends received. So you need to know the difference between these two accounts. Second, there is dividends here that has been distributed by the subsidiary company to the parent and the NCI. So we need to keep this in mind because those 33,000, I'm going to take them and first I multiply them by 90% to get the portion of the dividends for, the portion of the dividends for the parent company, and then the 10% for the portion of the NCI. So you need to keep this in mind. And now we have here the income statement or the income for the parent, which is the 90% of the investment goes to the parent company. So why I highlight these numbers? Because I'm going to use them on my calculation. First of all, the requirements here, just to clear it off, the requirements here, we need to do the journal entry for the investment. during 2018. So during 2018, I have 3 transactions happen. First, the investment by 270, 900. Second, the distribution of the net income for 77,400. Third, the distribution of the dividends, which is 33,000 times 90%. We get 27,900. Because the company uses the equity method, it says here that Pedro uses the equity method. And I hope you still remember from the previous lectures that when we use the equity method, number 1, we record the investment. Number 2, we record our portion of the net income, which is 77,400. And we record our portion of dividends, 29,700, but we don't record the fluctuation of the company net identifiable asset in the market. So here in the 3 transactions, we will use one key account investment in Sidra company, which is the subsidiary. So we record the journals that way. So we debit investment in Sidra company by 270,900 credit cash. Remember, if we give bonds, we credit bonds and premium or discount. And then we credit our portion of the net income. We debit also the same account investment in Sidra company, credit income from Sidra. And then for the receipt of dividends, we debit cash, credit investment in Sidra company by the dividends. So this is the first requirement. We need to calculate the journal transactions. Second, we need to do the worksheet. But before we do the worksheet, we have to calculate the income, the common stock and the retained earnings. The retained earnings here have beginning balance, which is 113, and we need to calculate the ending balance, plus we need to calculate the NCR. So how do we start? First of all, here we go. We know the investment for Pedro company, and here remember, this will take 90%, and the NCI will take 10%, because this is what's given in the exam. This amount, 270,900 is given. The common stock also is given from the trial balance and the retained earnings. But we didn't get the NCI. So how do we calculate the 3,100? We add retained earnings plus common stock minus Pedro investment, we get NCI. Second, the net income here, 77,400. And we know that this one makes 90%. So how much do we get for 100%? Okay, how much is the amount? I should get it here. Here, to get this amount, we divide 77,400 divided by 90%. So the total net income, 86%, 86,000. So 86,000 minus 77,400, we get the NCI. So please remember, the amounts in the NCI account are not given, but usually we ask that the person should calculate them. So all the time, whether in the assignment or the exam, you will be asked to calculate the NCI. The last one is the dividends. The dividends we know from the trial balance here, it is 33, this one. And as I said, we take those 33, divide them by 90% to the parent, 10% for the NCI. And then we take this one and make the calculation. So for the NCI final balance, 3,100 minus 8,600, plus 8,600 minus 3,300, dividends, we get the ending balance 35,400. Pedro, we calculate the same thing as NCI, but we know that this final answer 318,600, it's already given to us here. So this means that my calculation is correct. And finally, the common stock and the retained earnings. The common stock doesn't change. The retained earnings, 166,000. By the way, those two amounts will be closed off in the balance sheet. So now after I made the transactions and the calculation of the retained earnings, I will jump to the second sheet. In this sheet, we need to calculate first the consolidation in the income statement, then the consolidation in retained earnings, and finally balance sheet. But let's start by the income statement. In the income statement, we add the sales of the parent plus the subsidiary. We get the total here. Then we add the cost of goods sold for both companies. Then we add the depreciation here for both of them. We know from previous examples that the depreciation must be closed. Yes, I will close it. But the journal entry to close down the depreciation, we debit accumulated depreciation by 8,000 and credit building and equipment by 8,000. So those two accounts do not exist in the income statement. They exist in the balance sheet. So when I come to the balance sheet, I will close it off. But in the meantime, I will leave it in the income statement. And then for the selling and admin, we add them together. For the income from Sidra company, it was here, credit because it's income. Then I will make it debit to close them off and make them zero. Okay. So the consolidated net income here for the parent company, if you would like to make it, it should be equal that amount. So here, if I add sales minus plus, I get 423,400. The same thing for Sidra. The debit will be 77,400. And the consolidated net income, this one, 432,000. But I have the NCI in the net income, and this is what we find it here. The net income, we get 8,600. I put it here, 8,600, and it will be subtracted. So if I subtract 432 minus 8,600, we get 423,400. And this is the consolidation for the income statement. Now I take the net income to the next statement, which is retained earnings. So here is the retained earnings. For Pedro company, it's the same, it doesn't change. From where I get these numbers, it's here from the balance sheet. So here, if you see the retained earnings here, if you see the net income, it's the same. So we get it from here. 273, I get it from the previous one. Here, the net income, I put it here. The dividends declared, if you go, you will find it here, 91,000. So for the parent company, I have no problem. But from where I get the subsidiary company, 113 plus 86 minus 33, I get them from this report. 113 plus 86 minus 33. So what we calculated in this table exactly will be the same here. And now, if you remember from the previous exercises that we have to close off everything related to the subsidiary retained earnings. So this amount is credit, I put it debit. The same thing, the net income credit, I put it debit. The dividends debit, I put it credit. And by doing that, I will cancel everything related to the retained earnings of the subsidiary, and I will end up by the retained earnings for the parent company. Once we do that, we jump to the balance sheet. So here in the balance sheet, we take cash, we take accounts receivable, inventory with no problem at all. But as we did in the previous examples, the investment will be closed, land will be the same. And here you can see that I put 8,000 credit for the asset, debit for the accumulated depreciation, and then we add them together. We end by having total asset 1,522,000, and then we do the accounts payable, bonds payable, common stock here, and here I remove the common stock of the subsidiary. Then the retained earnings, you see here 166, but I put 199 minus 33. Why I do that? Because if you remember, here I have the dividends and here is the net income. So I add them together, we get 199 to show the total income minus the 33 dividends, and then I put the NCI 35,400, and then we add the total amount, we get total equity. So this is in brief the example that I want to explain to show you how to make full consolidation for the net income, retained earnings, and balance sheet. I encourage you during my video, if you can stop it, take the exercise from Brightspace, try to make the calculation yourself, and then go back to my video to compare your answers. If you need any help, please let me know, and I wish you good luck for the assignment this week and for the exam next week. Take care. Bye-bye.